Joining us now is Marc LoPresti. He's a senior market strategist and CEO of Market Rebellion. Also joining us is Mitch Roschelle. He's the CEO of M2 Communities. Good morning, gents.
Good morning.
Good morning.
So the bull run that the tech stocks have enjoyed since Trump announced his Liberation Day appears to have actually hit a wall yesterday, no pun intended. Is this the end of the line, or what do you see in terms of going forward in the markets, Mitch Roschelle?
No, it's certainly not the end of the line. I've said this over and over again, so if I'm repeating myself on your show, forgive me, but stocks do not go up in a straight line. If you look at a stock chart, it's never a straight line. There's always dips and valleys. And one of the biggest things that the market is concerned about is what will the Fed do in their upcoming meeting. As they operate in a vacuum of data. The Fed claims to be data dependent, and they don't have it because of the government shutdown. And yesterday, the rumor circulating around the investment community was that the Fed may not cut rates in the December meeting. And that's what caused the market to slide. Let's remember, at the end of the day, stocks go up because of the earnings of the companies. And cross currents like interest rates, government shutdowns, or other geopolitical concerns really are short term. The end of the day, if those stocks continue to outperform from an earnings perspective, they'll continue to go up.
Yeah, Mark, what's your perception of market sentiment right now, and especially given AI and what we heard from Mitch in terms of the Fed and all of their chatter?
Yeah, well, listen, it's very simple. Number one, we anticipated that we were going to have a couple of sell-offs between here and the end of the year. Between here and what we expect will be a very strong bull run into December and through the beginning of 2026, right? We had a couple of things coming out of the tech names. We had CoreWeave and one other tech company basically saying, listen, we think we may be seeing a little bit of slowing demand, but that is two out of a large community of tech companies and AI darlings who continue. We had AMD just yesterday, CEO Lisa Su saying that the demand for what they make in the chip sector was, quote unquote, absolutely insatiable, right? So here's what happened, guys. The government shutdown took the narrative away when the government voted to reopen, thank God, after those 8 Democrats decided to break ranks with the rest of the madness and actually put forth a bill to reopen the government. And we have some really irresponsible chatter out of Fed governors like Lisa Cook and Hollis, basically saying, you know what, we don't think the situation warrants another rate cut. And now, unfortunately, what we're seeing is in that CME FedWatch tool that traders look at so carefully to determine what's going to happen at the next Fed rate cut, it's now a coin toss, guys. It's now 50-50 whether we're going to get even as much as a 25 basis point rate cut in December. This is irresponsible monetary policy on the part of this Fed. We need that 25 basis point rate cut. And all of this talk about not having data because of the shutdown is a bunch of BS.
I agree wholeheartedly. And you know, Mitch, the thing is that, you know what, on top of everything else, I think the risk appetite for many investors are starting to shift. Why? Because there's a lot of uncertainty. And as Mark just pointed out, not knowing if we're going to get that rate cut or not knowing what the data will ultimately be as the government begins to reopen. So some people are actually shifting to more defensive stocks, more value instead of high growth, because many people see that some of these stocks are way overvalued. What say you?
Well, listen, the big names that have driven the stock market higher, the NVIDIAs, the Palantirs, even Apple and Microsoft, which are hardly new names, they're ripe for profit taking. And that's exactly what's happening. You know, investors get jitters, they take profits. They don't necessarily immediately dump them, John, that money into other growth names, or they generally dump that into cash and then sit with cash for a while. And the thing that I always find fascinating is even in a high-flying stock market like what we've experienced, certainly in the last 300 days, the amount of cash sitting on the sidelines that investors have not deployed remains overwhelming. So we'll see. Interest rates come down, people start earning less on that money that they have stashed in money market funds. You'd be surprised how quickly investors are willing to take risks to go back into the stock market.
Yeah. Well, many are bullish, though, into Q1 of next year because President Trump is going to have his say with respect to the Fed, and I'm sure they will follow his direction. But due to the government shutdown, I know we are talking about the jobs numbers and how they were delayed, whether or not that has an influence. Mark, what are you expecting when the reports do finally come out, though?
Well, there's a big question as to whether or not we'll ever get the reports that we did not get in the last 45 days. In fact, we heard from White House representatives yesterday that we should not expect to get those BLS reports. We may not get that CPI report. And here's what's interesting, guys, and we've talked about this on the show. The BLS, the Bureau of Labor Statistics, which is responsible for giving us those weekly job numbers, those JOLTS numbers, those employment picture numbers, are so antiquated in the way that those numbers are compiled. They send forms in the mail that people are expected to fill out on a voluntary basis with a number 2 pencil and send it back in. It's nonsense. The data is old. The data is inaccurate. And what I like about what's happened with the government shutdown is that the Fed has actually had to turn to the private sources of data, the accurate and real-time sources of data that the hedge funds and the money managers on Wall Street use. That's the data that we should be looking at. That's the data that's more accurate. And what does that data tell us? What has the data been telling us during the government shutdown in the absence of the beloved Bureau of Labor Statistics data, which is arguably worthless? It's been telling us that we are starting to see weakness in the jobs market as a result of what? I know this is not going to surprise you guys, artificial intelligence. And what does that give the Fed even more reason to do? If we're seeing weakness in the labor market, if we're seeing cracks start to form in what they thought was that otherwise continued demand on the corporate side for more employees, that gives them even more reason to give us a 25 or a 50 basis point cut in December, as Fed Governor Moran is suggesting. So that, and when you put that into context, along with the strength of government earnings thus far, to do anything but give us a rate cut in December is fiscally irresponsible, and I better not see it out of this Fed.
You know what? We need to cut that clip and send it, make it go viral, and make sure it ends up on Jerome Powell's desk. You know what, Mitch? Here's the situation. We can look at a lot of different data points, right? Not just rely on this government data that will soon get back into operation. But when you look at the crypto markets, it's dropped roughly 20% over the last 3 months. Just yesterday, a sharp decline. So what is that signaling? Because many people have been investing into cryptocurrency more and more as not only an alternative, but a hope for the future.
I think the drop-off in the crypto market, and we talk about Bitcoin as the bellwether for the crypto market, is largely because less speculators were speculating. I'm not a huge fan of looking at crypto as the store of value per se, but you know, the $100,000 plus range per coin has certainly held up over time. But I think, you know, it's very speculative, and I think people got less speculative because there is uncertainty out there. You would actually think that in times of uncertainty, look at the run up in gold, people start to rotate towards it. But the fact of the matter is, you know, it trades in part like a store of value, like a gold, but it also is ripe for speculation. When my son wanted to place a bet on whether or not crypto would hit $140-something thousand by the end of the week, and he was looking to make a bet on Polymarket, you know that's an asset class that's ripe for speculation.
You know, the thing is that I have a little bit in crypto, but I'm not the one to give crypto advice. I still write checks.
Mark, final thoughts on the crypto market right now?
I have a checkbook right here, right on my desk.
See?
So here's the thing, guys. I haven't seen a checkbook in probably 5 years. But so listen, I have a different take on it. Okay, crypto does trade as a speculative asset. It does tend to trade in correlation and in tandem with those AI, those Mag 7, those tech darling stocks. When we see those sell off, crypto tends to sell off. And here's the reason why a lot of smart money crypto investors, myself included, I'll tell you right now, I've got a December IBIT options call play on this thing that's got a Bitcoin price target of around 140, right? We even saw Tom Lee, the great crypto bull, bringing back his price target for the end of the year from 300,000 to 150. That's still a hell of a lot higher than the 100,000 that we are here. And here's why we're going to get close to those numbers. We have the balance of the president's cryptocurrency regulation that got stuck after summer recess and stalled during the government shutdown. That's going to get completed. It's on the legislative calendar. When the balance of that crypto regulation passes through the House before the end of the year, you're going to see the crypto bulls back in charge.
Got it.
Gotcha.
Right.
Just for clarity, folks, you know, I'm not a dinosaur. I like to receive my money electronically, but I like to pay money by check.
Well, Mitch Roschelle, great to have you. And Marc LoPresti, wherever you are is where I need to be right now. Very jealous. Great to have you as well. Oh, very beautiful. Thank you so much for joining us. And Mitch, too.
I have palm trees, too, right out there. Palm trees.
Snowbirds. I love it.
Awesome.
Good to
Thank
see
you
guys.
guys.